Hey there, money lovers. Remember cash? That tangible, papery stuff we used to trade for goods and services? Yeah, that papery stuff we used to trade for things. It was a physical representation of value that we could hold in our hands. Well, buckle up because the future of money is going digital. We're moving away from physical cash and stepping into a world where transactions happen with just a few taps on a screen. We're talking about central bank digital currencies, or CBDCs. These are digital forms of money issued by central banks designed to be a secure and efficient means of payment. Think of it like this: it's still government-backed money, but instead of carrying it around in your wallet, it lives on a computer network. This means you can access it anytime, anywhere, as long as you have an internet connection. Now you might be thinking, John, isn't that just like using my debit card? Not quite. While debit cards are linked to your bank account, CBDCs are a direct claim on the central bank itself. CBDCs are like digital versions of the cash in your pocket. They offer the same level of security and trust, but with the added convenience of digital transactions. They're a direct claim on the central bank, not a bank account. This means that even if your bank fails, your digital currency remains safe and secure. This is a big deal, folks. We're talking about a fundamental shift in how we think about and use money. We're talking about a potential revolution in how we use and think about money. Imagine a world where payments are faster, more efficient, and accessible to everyone, regardless of their location or financial status. Imagine faster payments, lower costs, and greater financial inclusion for millions. This could be a game changer for people in developing countries who currently lack access to traditional banking services. But like any good revolution, there are also some potential downsides.
Did you know there's a connection between the digital dollar and your retirement savings? As central banks and governments around the world are exploring central bank digital currencies, how could this affect retirement savers? Are you prepared? Click the link now and grab our exclusive report, The Downside of a Digital Dollar. This report helps investors understand the digital dollar risks of financial surveillance, market instability, and stringent regulations. Understanding potential impacts of digital currency can be daunting, but it's crucial for investors to anticipate the possible effects on their savings. Don't wait. Click the link to download this exclusive report, The Downside of a Digital Dollar, and stay ahead of the game.
Issues like privacy concerns, cybersecurity risks, and the impact on traditional banking systems need to be carefully considered. Stick with us as we dive into the world of CBDCs, exploring the good, the bad, and the potentially ugly. We'll look at how different countries are approaching this new technology and what it means for the future of finance. Because understanding this new form of money is crucial for navigating the future of finance. Stay tuned as we unravel the complexities and opportunities of central bank digital currencies. Alright, let's break down this digital money maze. We've got cryptocurrencies like Bitcoin, stablecoins pegged to real-world assets, and now CBDCs. It's enough to make your head spin. The key difference? CBDCs are issued and backed by governments. Think of them as the digital cousins of your dollar bills. They carry the full weight and authority of the issuing central bank. Cryptocurrencies, on the other hand, are decentralized. No single entity controls them. They rely on blockchain technology, which is like a public ledger that records all transactions. Stablecoins try to bridge the gap. They're pegged to something stable like the US dollar to minimize price volatility. But CBDCs are unique. They combine the digital convenience of crypto with the stability and trust of traditional fiat currency. It's like having the best of both worlds. Or is it? More on that later. So why are CBDCs suddenly all the rage? Well, the financial world is changing faster than a cheetah on a sugar rush. Countries are looking for ways to modernize their payment systems, enhance financial inclusion, and keep up with the digital economy. China is leading the charge with its digital yuan. They're already testing it out with millions of users. The European Union is hot on their heels exploring a digital euro. And guess what? Even the good old US of A is dipping its toes in the CBDC waters. This is a global movement, folks. Central banks are realizing that digital currencies are no longer a futuristic fantasy. They're knocking on our doors, and the implications are huge. Section 4. Inside CBDCs. How do they actually work? let's dive into the mechanics behind central bank digital currencies or CBDCs. Enough with the why, let's talk about the how. Understanding the inner workings can help demystify this complex topic. CBDCs operate on something called a digital ledger, which is a fancy way of saying a secure database. This digital ledger is the backbone of the entire system. Think of it like a giant digital spreadsheet that tracks every single transaction. Every time you make a payment or receive money, it's logged here. But here's the catch. This ledger isn't controlled by a single entity like a bank. Instead, it's decentralized. It's distributed across multiple computers, making it incredibly secure and transparent. This decentralization is key to its security. When you make a payment with a CBDC, it's recorded on this ledger, and the transaction is validated by a network of computers. This process ensures accuracy and prevents fraud. This eliminates the need for intermediaries, reduces costs, and speeds up payment times. Imagine transferring money instantly without waiting for bank approval. Plus, CBDCs can be programmed. This means they can have built-in rules and conditions. Imagine setting up automatic payments for bills, receiving government benefits directly, or even having money expire after a certain date to encourage spending. These programmable features open up a world of possibilities. The possibilities are both exciting and a little bit terrifying. While the potential for innovation is immense, it also raises questions about privacy and control. Governments and financial institutions are still figuring out the best ways to implement and regulate CBDCs. It's a balancing act between innovation and security. As we move forward, understanding how CBDCs work will be crucial for everyone, from policymakers to everyday users. The future of money is digital, and it's already here. Section 5. The promise of CBDCs, efficiency, inclusion, and more. Okay, let's talk about the good stuff. CBDCs have the potential to revolutionize our financial system in some pretty awesome ways. First up, efficiency. Remember those days of waiting for checks to clear or dealing with wire transfer fees? CBDCs could make those headaches a thing of the past. Transactions would be faster, cheaper, and more secure. Second, financial inclusion. Millions of people around the world don't have access to traditional banking services. CBDCs could provide a secure and accessible way for them to participate in the digital economy. And that's not all. CBDCs could reduce fraud, simplify cross-border payments, and even make it easier for governments to implement monetary policy. It's like a financial utopia. Or at least that's what the proponents want you to believe. Section 6. The privacy predicament, CBDCs and Big Brother. Alright, time for a reality check. While CBDCs offer some tantalizing benefits, they also come with a whole host of concerns. And at the top of that list is privacy. Imagine a world where the government knows every single penny you spend, where you spend it, and who you spend it with. That's the potential reality of CBDCs. Every transaction is recorded on a centralized ledger, which means your financial life could become an open book. Now, governments argue that this increased transparency is necessary to combat financial crime, and they promise to implement safeguards to protect user privacy. But let's be real, folks. When has the government ever turned down an opportunity to expand its surveillance powers? This is a slippery slope, my friends, and it's one we need to navigate with extreme caution. Section 7. Beyond CBDCs, exploring alternative financial paths. In this section, we will delve into the various financial avenues available to us beyond the realm of central bank digital currencies, or CBDCs. Don't worry, it's not all doom and gloom. There are plenty of exciting and innovative financial solutions out there that can offer us more control and flexibility over our money. There are alternatives to this whole CBDC shebang. These alternatives can provide us with the freedom to manage our finances in ways that suit our individual needs and preferences. Let's explore some other paths to financial freedom, shall we? These paths can empower us to take charge of our financial destinies and achieve true independence. First up, we've got cryptocurrencies. These digital assets have revolutionized the way we think about money and transactions. Sure, they can be volatile, but they offer something CBDCs don't: decentralization. This means that no single entity has control over the entire network. With crypto, you're not beholden to any government or financial institution. You have the power to manage your own assets without intermediaries. Then we have stablecoins, which aim to provide the best of both worlds: stability and decentralization. These digital currencies are designed to minimize price volatility. They're pegged to stable assets like the US dollar, so they're less prone to wild price swings. This makes them a more reliable option for everyday transactions. And let's not forget about good old-fashioned cash. Despite the rise of digital currencies, cash remains a vital part of our financial system. It may be analog, but it's still the king of privacy. Cash transactions are untraceable, providing a level of anonymity that digital transactions can't match. No one knows how much cash you have in your pocket or what you're spending it on. This makes cash a valuable tool for maintaining financial privacy. The point is, we have options, people. We don't have to rely solely on CBDCs. There are multiple financial paths we can explore to find what works best for us. Don't let anyone tell you that CBDCs are the only way forward. Embrace the variety of financial tools at your disposal and choose the path that aligns with your values and goals. Another excellent option is investing in physical gold and silver, as well as gold and silver IRAs. These precious metals have stood the test of time as reliable stores of value. You can store physical gold and silver at home or in a secure third-party storage outside the banks and big financial system. This provides an additional layer of security and independence. Gold and silver offer a tangible asset that can protect your wealth against economic uncertainties and inflation. They are a solid addition to any diversified financial strategy.
Did you know there's a connection between the digital dollar and your retirement savings? As central banks and governments around the world are exploring central bank digital currencies, how could this affect retirement savers? Are you prepared? Click the link now and grab our exclusive report, The Downside of a Digital Dollar. This report helps investors understand the digital dollar risks of financial surveillance, market instability, and stringent regulations. Understanding potential impacts of digital currency can be daunting, but it's crucial for investors to anticipate the possible effects on their savings. Don't wait. Click the link to download this exclusive report, The Downside of a Digital Dollar, and stay ahead of the game.
Learn more about gold at our website at givemethegold.com. Please feel free to subscribe and explore our channel for more informative videos. Thanks again for stopping by.